Welcome to our channel. Today we're diving into an important topic that affects not just global superpowers, but also smaller economies like Sri Lanka. We'll explore how U.S. tariff strategies and the ongoing U.S. China trade war are impacting Sri Lanka's economy. From exports to foreign investment, the ripple effects are extensive. To get future videos delivered to you without missing them, please subscribe to my channel, leave a like, and hit that notification bell so you don't miss any future videos. The Trump administration's new tariff strategies initiated in early 2025 involve significant changes to U.S. trade policy, including broad-based tariffs and reciprocal tariff measures aimed at addressing trade imbalances and achieving strategic objectives. Given Sri Lanka's economic ties with the United States, these policies are likely to have a notable impact on its economy. Additionally, the ongoing U.S. China trade war, which began in 2018, has had ripple effects across the global economy, including on smaller economies like Sri Lanka. We are trying to consolidate and analyze the multifaceted effects of these trade policies on Sri Lanka's economy, focusing on its export-driven sectors, trade balance, and broader economic implications. Background on U.S. tariff strategies. The Trump administration has implemented a multi-pronged tariff approach. Universal tariffs. Proposals include a 10% to 20% tariff on all imports to the U.S., with some indications of even higher rates for specific countries or goods. Reciprocal tariffs. Set to begin on April 2, 2025, these tariffs mirror the rates that other countries impose on U.S. exports, aiming to level the playing field. Country-specific tariffs. Additional tariffs, such as a 10% duty on Chinese goods, effective March 4, 2025, and 25% tariffs on Canada and Mexico, signal a broader protectionist stance that could extend to other trading partners like Sri Lanka. Sri Lanka's exports are heavily dependent on the U.S. Let's look at how these new tariffs are affecting key sectors. Apparel industry. Apparel is Sri Lanka's largest export to the U.S., valued at over $2 billion annually. A 20% tariff could lead to an 8.1% contraction, forcing exporters to absorb losses or lose market share to competitors like Vietnam and Bangladesh. Rubber and plastic products. Products like tires and gloves face significant risks. Higher tariffs could reduce competitiveness in the U.S. market, leading to revenue declines. Agricultural exports. While tea exports are more focused on Europe and the Middle East, coconut products and spices face higher prices in the U.S. market, potentially reducing demand. Other manufactured goods, low-value, high-volume items could see sharp declines as U.S. retailers look for cheaper alternatives. The impact goes beyond exports. Let's look at the broader economic implications. Foreign exchange and reserves. Sri Lanka relies on export earnings to boost its foreign exchange reserves. A drop in U.S. exports could worsen the trade deficit and put pressure on the Sri Lankan rupee. Retaliatory risks. Although Sri Lanka imports little from the U.S., any retaliatory tariffs could trigger further U.S. escalation, disrupting even minor trade flows. Global trade environment. U.S. tariffs could spark a broader trade war affecting Sri Lanka's other markets. An economic downturn in the EU, for example, could reduce global demand for Sri Lankan goods. Tourism. American tourists are a growing segment of Sri Lanka's tourism sector. Higher U.S. consumer costs from tariffs might reduce disposable income for travel, indirectly affecting this revenue source. The situation is similar in other parts of the world. Despite these challenges, there are potential mitigating factors. Sri Lanka's duty-free access to the EU market under the Generalized Scheme of Preferences Plus, or GSP Plus, could help offset some losses from U.S. tariffs. Joining trade blocs like the Regional Comprehensive Economic Partnership, or RCP, could help diversify Sri Lanka's export markets. Additionally, Sri Lanka could seek exemptions or lower tariffs by aligning with U.S. strategic goals, though its limited leverage makes this uncertain. The U.S. China trade war, which began in 2018, has also had significant ripple effects on Sri Lanka. Disrupted global supply chains and shifting trade patterns have affected Sri Lanka's export volumes and competitiveness. Sri Lanka relies heavily on Chinese imports for machinery and raw materials. The trade war led to higher costs for these goods, putting a strain on local businesses. While some companies relocated from China, Sri Lanka faced stiff competition from larger economies like Vietnam and India. A global economic slowdown, partly fueled by the trade war, could reduce remittances from Sri Lankan workers in the Middle East, a critical source of foreign exchange. Finally, global economic uncertainty may reduce international travel, affecting Sri Lanka's tourism industry. Despite these challenges, there are opportunities. The trade war highlights the risks of relying too heavily on specific markets. Sri Lanka can take this opportunity to diversify its trade partnerships. By improving its investment climate and infrastructure, Sri Lanka could become an attractive destination for companies moving out of China. The trade war has shown how vulnerable Sri Lanka is to external shocks. To build resilience, Sri Lanka needs to boost export competitiveness, diversify export markets, improve the ease of doing business to attract foreign direct investment, and strengthen domestic industries to cut down on reliance on imports. The Trump administration's tariff policies and the U.S. China trade conflict present both challenges and opportunities for Sri Lanka. While the immediate effects may be negative, especially for key export sectors, there's also potential for diversification and attracting foreign investment. Sri Lanka must navigate these complex dynamics carefully, leveraging mitigating factors and implementing long-term reforms to enhance its economic resilience. Thanks for watching. Don't forget to like, share, and subscribe for more in-depth analyses of global economic trends towards Sri Lanka's economy. See you in the next video.